I don't want to downplay the near-term risks related to the coronavirus outbreak. Global growth is anticipated to slow significantly, and some economies will get tipped into recession, including ours. This is going to hurt. I'll also note that there's factors surrounding the economic backdrop with respect to the coronavirus that are unique, which means that history is less of a guide. But there are definite similarities to past bear markets. Investor time horizons have begun to shorten, tunnel vision is setting in. For many, worst-case scenarios are becoming the de facto forecast by which long-term investment decisions get made. As long-term investors, we have to fight that fear. Given the swift market correction, I'm beginning to see buying opportunities both here and abroad for longer-term investors. Yes, there are still plenty of near-term unknowns for our economy that will keep us on edge. Jobs will be lost, as will profits, and capital spending, which was already weak, is now going to get even weaker. That said, eventually there will be a recovery. We will get through this, and pressure on the markets will alleviate. That pressure alleviation could happen as soon as a month or two from now, assuming this virus is seasonal. We don't know if this specific virus will be seasonal, but the history with similar viruses suggests that it is a reasonable assumption. There are a number of reasons that viruses are seasonal, but the main factors are sunshine, heat, and humidity. Understand, though, warmer weather doesn't mean that this goes away. We have all had the flu in the summer. At some time in the past, it just happens less often. There's also the risk that it comes back in the fall, though I believe that we'll be much more prepared if it does. In any case, what we as investors care about is the trend, and a slowing in the pace of cases and deaths will be very comforting for the markets. Another consideration is that just as this coronavirus tension eases, the combined effects of monetary and fiscal stimulus could be feeding into our economy. It's truly incredible the speed with which markets have corrected. The S&P 500 saw its quickest fall into a bear market in history. At the same time, investment-grade bonds have rallied. The yield on the Barclays Agg hit all-time lows. That suggests that portfolios could be out of balance. This is one of the actions we're suggesting for long-term investors. We suggest you consider taking advantage of higher-priced bonds and lower-priced stocks and consider rebalancing your portfolios. We would also suggest for those clients that have built up cash that they begin averaging into risk assets. And then lastly, with respect to the speed of this market decline, it's that it's likely creating market dislocations, something an active portfolio manager could potentially take advantage of. We would lean towards putting new money to work in actively managed strategies as opposed to strategies that simply track an index.
The information provided represents Touchstone's views and observations regarding past and current market conditions and investor behaviors. The information and statements provided here are believed to be true and accurate. There can be no assurance, however, that the beliefs expressed herein will be consistent with future market conditions and investor behaviors. This commentary is for informational purposes only and should not be used or construed as an offer to sell, a solicitation of an offer to buy, or a recommendation to buy, sell, or hold any security. Investing in an index is not possible. Investing involves risk, including the possible loss of principal and fluctuation of value. Past performance is no guarantee of future results. Please consider the investment objectives, risks, charges, and expenses of a fund carefully before investing. The prospectus and the summary prospectus contain this and other information about the funds. To obtain a prospectus or a summary prospectus, contact your financial advisor or download and/or request one at touchstoneinvestments.com/literature-center or call Touchstone Investments at 800-638-8194. Please read the prospectus and/or summary prospectus carefully before investing. Touchstone funds are distributed by Touchstone Securities, Inc., a registered broker-dealer and member FINRA and SIPC, a member of Western Southern Financial Group. Copyright 2020, Touchstone Securities, Inc.